Hello everyone and welcome to today's webinar. Thank you so much for taking the time to be with us today. You are in for a treat. Today you'll learn some key information about transfer duty and this will help you with your work. When you leave here today, you'll probably have more of a bigger picture view of how Revenue WA operates and a clear understanding of transfer duty requirements. We respectfully acknowledge the traditional custodians, the Whadjuk Noongar people, on whose country we are meeting on today, and pay our respects to their elders past and present. We also extend our respect and acknowledgement to all traditional custodians and Aboriginal communities throughout Western Australia and their continuing connection to country, culture and community. We acknowledge and pay tribute to the strength and stewardship of Aboriginal people in sustaining the world's oldest living culture and value the contribution Aboriginal people make to West Australia's communities and economy. Just a quick disclaimer, these notes have been prepared by Revenue WA as a guide to understanding the legislation. The relevant legislation remains the ultimate source of authority on any matter. There are 2 elective CPD points attached to this webinar for attending the whole webinar. Please note that you are responsible for maintaining your CPD points and certificates of completion, as the Department of Local Government, Commerce, Industry Regulation and Safety may request proof of completion. If completion cannot be proved, enforcement action may be taken. To grant CPD points, we will be asking for attendees to send through their licence number and full name in our post-webinar email. Here is our agenda for today. By the end of this webinar, you should be able to understand the basic elements of transfer duty liability, be aware of the administrative requirements including lodgment and assessing dutiable value, apply this understanding to deceased estates context, identify how residual property is treated and distributed under a will, explain the distribution of a property under an intestacy, understand the term deed of family arrangement and when nominal duty applies in these cases. We will identify information requirements for deceased estates transactions that are in line with the Will and Administration Act provisions. We will also go through what information is required when there is a variance. We will understand how duty is calculated on life and remainder interests, property and duty information requirements. We will recognise when valuation of property is required and the valuation requirements, plus when foreign transfer duty applies and when it is exempt. So let's start with learning outcome 1, dutiable transactions and property. Today we'll be referring to the Commissioner's Practice DA 29.5. The Commissioner's Practice contains information and examples about distribution of property under a will, distribution of intestacy or invalid wills, vesting or granting of dutiable property as pursuant to a court order, deeds of family arrangement, and disclaimers of interest where a person renounces their legal right to benefit from an inheritance that can be either under a will or through intestacy or through a trust. The Commissioner's Practice is a useful resource that you can refer to for this topic. Let's start off by reviewing the terms with their definitions. Chattels are movable items of dutiable property. Consideration is purchase price for the property. Will is legal declaration of a person's wishes about how his or her property will be disposed of or distributed after death. Beneficiary is a person chosen to receive funds or other property under a will. Executor is a person named in a will as responsible for carrying out the provisions of the will. Probate is a certificate issued by the Supreme Court that acknowledges that a will has been proved as valid and authorising the executor named in the will to administer the estate. Unencumbered value is the value of property if it were free from encumbrances, such as a mortgage. Next, we're going to look at what transfer duty is. Transfer duty must be considered when there is a death in a family, as property might be left to the beneficiary. On the screen, you can see two terms, dutiable transactions and dutiable property. These are two very specific elements. If we don't have both of these married together, then there is no liability to pay transfer duty. Let's look at these two elements in more detail. We're going to have a look at Section 11 of the Duties Act. You can find an excerpt of this in your handouts pane. So Section 11 contains an exhaustive list of what dutiable transactions are, and you can refer to this list in future. However, it is always best to get the most recent version of the Act when doing so, so you can access this by going to the www.legislation.wa.gov.au website. As you can see in Section 11, the first three dutiable transactions are a transfer of dutiable property, for example, a transfer of land, an agreement to transfer dutiable property, so for example, an offer and acceptance when you buy a property, and a declaration of trust over dutiable property. So this means any declaration, other than by a will, that identifies that property is to be held in trust for another person. Around 80% or more of transactions would likely fall under these three types of dutiable transactions. For the purposes of today's session, there is another dutiable transaction to note. This is found in Section 11G of the Duties Act, and that is a surrenderer of special dutiable property. When you look further through the Act at Section 18, special dutiable property includes life and remainder interest in land. So this will come up later in the session. So remember, this is a dutiable transaction. We have looked at what dutiable transactions are. Now let's look at what is dutiable property. You can refer to Section 15 of your Duties Act handout. And as you can see, dutiable property includes land in Western Australia, a right but only if consideration is paid. The most common right encountered by Revenue WA is an option to acquire dutiable property, a chattel in Western Australia, but only when they are transferred with other dutiable property, and Western Australian business assets. You should always check with us, Revenue WA, if you are unsure. Let's do activity 2. And I want you to decide whether each of the following transactions would result in a liability for duty. The question is, Mary Smith receives a house as left to her by her grandfather in his will. Is this a dutiable transaction, yes or no? Yes, and you would be correct. Gifts are not exempt and therefore are liable for duty. This information can be found in the Duties Act, Section 11, subsection 1A, which talks about transfer of dutiable property, and Section 15A, which talks about land. All right, so the next question. Jenny Jones dies and leaves a life interest in her residence to her husband in her will. Is this a dutiable transaction? Yes or no? So the answer for this one is yes, it is dutiable. Life interest is dutiable. So Section 11, subsection 1G and Section 15A cover this information. All right, next question. So Jim Smith inherited $100,000 in cash from his mother's estate. Is this a dutiable transaction? The correct answer is no, because cash is not a dutiable property, and therefore this is not a dutiable transaction. Well done, everyone. Next question. So, Joe Bloggs receives an antique vase as left to him by his grandmother in her will. Is this a dutiable transaction? The answer is no. The antique vase is not considered dutiable property. Okay, I think we have one more question for this activity. All right. John Citizen dies without a valid will, so intestate. And as a result of the distribution of his property, his wife receives their house. Is this a dutiable transaction, yes or no? The answer is yes, it is dutiable. As John Citizen didn't have a valid will, according to the Administration Act, the property will be distributed amongst his relatives. The property is a dutiable property and therefore a dutiable transaction under Section 11, subsection 1A and Section 15A. So just a reminder that there are only 4 items of dutiable property that may be the subject of a dutiable transaction listed under Section 15, and they are land in WA, a right, chattels in WA, and WA business assets. If the item is not on the list, then transfer duty does not apply. So let's look at liability to pay duty. Usually when there is a transfer of duty, it's the person receiving the property that has the liability to pay duty. Liability to pay transfer duty arises when the property is transferred or the agreement is made to transfer it to the beneficiaries. So in most deceased estate transactions, liability for transfer duty occurs when the property is transferred. Moving on to lodgment. All dutiable transactions are required to be lodged for assessment purposes within 2 months after the day that duty liability arises. The liable party must lodge an instrument, and an instrument is any document that affects or evidences a transaction, such as a transfer of land. If there is no hard copy instrument, the liable party must lodge a transfer duty statement instead. This form is available on wa.gov.au on the Duties, Forms and Publications page, which we'll show you at the end of today. And penalties apply if the instruments are lodged late. So for more information about penalties, there are Commissioner's practices available, such as the Taxation Administration Act, Commissioner's Practice 18.3. Let's look at rates of duty now. Each dutiable transaction is assessed at a specified rate, depending on a number of factors. You can view the duty rates on the wa.gov.au website, and we will also show you where to find these at the end of the session. The general rate applies to a dutiable transaction unless the Duties Act states otherwise. The rate depends on the dutiable value of the property, and you can use our online calculator to estimate how much duty you may need to pay. The concessional rate of duty includes the first homeowner rate and concessions for residential or business properties not exceeding $200,000 in value. Please note that before the 1st of July 2022, there was a concessional rate for residential property. The residential rate is now the same as the general rate. Then we have the nominal duty rate, which is $20. So nominal duty applies to certain transactions, including some transactions involving deceased estates, such as the distribution of property under a will. We'll look at when nominal duty can be applied to deceased estates transaction in today's webinar. You'll see the term DATAR used today. This stands for duty at the applicable rate. And we use this term as a catch-all for all rates of duty because it will depend on the number of factors as to what duty rate is applicable. So again, when you see the term DATAR, we mean duty at the applicable rate. Next, let's look at dutiable value of a dutiable transaction. Generally, the dutiable value of a dutiable transaction will be whichever is greater, either the consideration or the unencumbered value. Consideration, as mentioned earlier, is the purchase price or amount paid for property. The unencumbered value is the value of property free of encumbrances, such as a mortgage. Next is joint tenants and survivorship. If one of the joint tenants dies, property passes to other joint tenants or tenants by law. once a survivorship application has been lodged and processed by Landgate. If there is no lodgement requirement with Revenue WA and no nominal duty applies, as it is not a dutiable transaction, this is because the interest of each joint tenant is not separate or distinct from the other. Rather, each is entitled to an undivided interest in the whole property. That is, they each own the whole. And we will show you where to find more information about lodging a survivorship application with Landgate at the end of the session today. I will now hand over to my colleague Alandra, who will take you through the next part of the webinar.
Thanks, Zoe. Okay, let's move on to learning outcome 2, which is identify how residual property is treated and distributed under a will, and when nominal duty can and cannot be applied. As we mentioned before, the last will is a formal statement of a person's wishes for how their assets should be distributed after they die. The person who creates the will is known as the testator. The purpose of a will is to ensure the smooth transfer of all the deceased estates to who they want, that is, specific beneficiaries such as a spouse, partner, or children. The property and assets belonging to a person who has died is called their deceased estate. A will may also contain a codicil, which is a document used to make minor changes, an amendment or alteration to an existing will. According to the courts, the goal of distribution of property under a will is to give effect to the last wishes of the deceased. The Supreme Court appoints a person to deal with the deceased estate. When there is a will, the court makes either one of the following grants. The court will grant probate to execute the wishes of the deceased to the person nominated as executor in the will, or if there is no one nominated as executor, or the person nominated was unable to do so, the court will nominate a person and grant them letters of administration with the will annexed. This is usually the beneficiary of the estate, and they are referred to as the administrator. If you recall from our very first activity where we defined the key terms, probate is a certificate granted by the Probate Office of the Supreme Court of Western Australia. It means that the deceased will has been proved as valid and registered, and that the executor has been granted authority to administer the deceased estate. The assets will then be distributed to the beneficiaries according to the will. Where dutiable property is transferred in line with the will, nominal duty applies. If dutiable property contained in a will is transferred to any other person, nominal duty will not be applied. Where the distribution of property varies from the terms of a will, duty will be charged at the applicable rate, which is not on nominal duty, on the variance. If some of the distribution is in line with the terms of the will, nominal duty will be charged on this portion and duty at the applicable rate on the rest. If there is only one transfer of land, only one charge of nominal duty will apply. If there is more than one transfer of land, there will be nominal duty applied to each individual transfer. So the question here is, a will provides that siblings Sue and Sharon Purple are to be granted half each of a house worth $500,000. They are also given a half share each in the AXS shares worth $500,000. Sue and Sharon follow the terms of the will in the distribution of property. What are the duties implications in this scenario? So let's have a look. So nominal duty will apply as the dutiable property is transferred in accordance with the terms of a will. Shares are not dutiable property here, or in general. Then next we have activity 3B. This example is slightly different from 3A. This time, Sue and Sharon agreed to take property not strictly in accordance with the will, such that Sue is to take the whole of the house and Sharon is to take all the shares. The house is dutiable property, while the shares are not dutiable. What are the duty implications in this scenario? Okay, so the first question is, what duty is payable by Sue? So let's go through the answer now. The transfer of the house to Sue is chargeable with nominal duty of $20 for the half share that she is entitled to under the will, and the additional half share transferred to her beyond her entitlement, which is $250,000, is then chargeable at duty at the applicable rate. Okay, let's see what Sharon's duty implications are. So it's no duty. So as we all know, shares are not dutiable property. Okay, now next activity, activity 3C. Question in here is, Barney Gumble dies with a will stating that his block of vacant land is to be given to Lenny Johnston and Carl Brown in equal shares. The land is valued at $320,000 and the estate has no other assets. Lenny and Carl agree that the land will be transferred to Lenny, who will pay Carl $100,000 for his share. The executor of the estate transfers the land accordingly. What will the duty implications be here? Lenny is entitled to receive a half share in the block under the will, so that half share is chargeable with nominal duty. Lenny is not entitled to the other half under the will, so duty is charged on the consideration paid or the unencumbered value, whichever is higher. And the consideration is $100,000, while the value is $160,000. This means that duty is charged on the $160,000, as that is the higher amount, and at duty at the applicable rate. So in short, Lenny must pay both nominal duty and duty on the applicable rate on the $160,000. Carl, on the other hand, has only received money, and as we all know, money is not dutiable property. So that is the end of this activity or this learning outcome of distribution under a will. So let's move on. So up to now, duty implications for residual property. So there is sometimes remaining property in the deceased estate after all specific gifts have been distributed and all liabilities satisfied. So this, for example, is the taxes, administrative fees, probate costs, and court costs. So in this situation, the executor is empowered by the Trustees Act to distribute the residual property, and this means that the balance of estate property remaining is distributed to the residuary beneficiaries based on fractional or percentage interest in line with the will. Where the executor of a deceased estate transfers property that forms part of the residuary estate to a beneficiary who is entitled to a fractional percentage of it, nominal duty will be charged on the transfer of any dutiable property. This is provided that the value of that dutiable property is not greater than the value of that person's entitlement to the residuary property. Where the executor transfers property to a residuary beneficiary and the value of any dutiable property is greater than that person's entitlement, duty at the applicable rate will be charged on the amount by which the value of the dutiable property exceeds their entitlement, plus nominal duty. Just like before, if some of the distribution is in line with the terms of the will, nominal duty will be charged on this portion and the duty at the applicable rate on the rest. So each and every asset does not have to be divided equally in the case of residual property, as long as the overall percentage or fraction of interest is in line with the will or intestacy. Okay, so activity 4A. So in this case, a deceased estate is made up of dutiable and non-dutiable property with a gross value of $3 million. The estate has $600,000 worth of liabilities. The will contains specific gifts of various items of property, which have a total value of $1,500,000. The balance of the estate comprises of a home unit, valued at $600,000, and cash and shares worth $900,000. The executor satisfies the liabilities from the cash and shares. The will provides that the residue of the estate, after satisfying all liabilities, is to be distributed equally to the deceased's 3 children, who we have as Mary, Sally, and Joe. to the value of $300,000 each. The executor transfers a 1/3 share in the home unit to each of the children and also distributes the remaining cash and shares equally. So what are the duty implications in this scenario? Okay, so the transfer of the home unit to the children is a transfer of dutiable property in line with the will. And this means that nominal duty applies to all, as it is in accordance to the will. The next activity is a variance of the previous example. So in the previous example, however, this time the children agree that a half share in the home unit is to be transferred to Mary and Sally, with Joe to receive all the cash and shares. So what would the duty implications be for the residuary property in this scenario? So what duty is payable for Mary and Sally, or by Mary and Sally in this scenario? So let's go through the answer. The answer here is A, nominal duty. So the transfer of the home unit to the two children is still chargeable with nominal duty of $20. So the provision in the will is that the residuary property be transferred equally to the deceased three children, does not require that each child must receive a 1/3 share in each and every asset, as long as the executor distributes 1/3 of the total property value to each child. The transfer of dutiable property will be regarded as being in line with the will. So it doesn't matter what each child receives, as long as they get 1/3 of the total property value. And then the cash and the transfer of shares is not a dutiable transaction for Joe. On to the next. So activity 5. A deceased estate is made up of a house worth $400,000 and shares worth $800,000. The estate has $300,000 worth of liabilities in the form of a mortgage, which has been incurred when the house was bought. The will provides that the house and shares are to be distributed equally to the deceased two children, Diane and Max. The executor decides not to pay out the estate liabilities amounting to $300,000. Diane and Max both receive half of the house and half of the shares. They also both assume half of the liabilities. So what would the duty implications be here for Diane and Max? So the transfer of the home unit to the children, subject to the mortgage, is chargeable with duty at the applicable rate on the value of $300,000. Nominal duty would apply to what Diane and Max are entitled to under the will and where no consideration was paid, the $100,000. Therefore, nominal duty is paid on $50,000 each. Duty at the applicable rate is charged on the amount by which the value of dutiable property exceeds that person's entitlement. The transfer of the home unit to the children included consideration for the outstanding loan, which in this case was the mortgage, of $300,000, and this is chargeable for duty. This equates to each person paying duty at the applicable rate on $150,000, as you can see on the slide. Then, as we all know, shares are not dutiable. Okay, actually that takes us to the end of the residuary property outcome. So moving on.
I'm just taking over from Alandra, and we're going to move on to learning outcome 4, distribution under an intestacy. So we have discussed transfer duty on a deceased property when there is a will, and now let's cover the case where there is no will. So dying intestate is dying without having left a valid will. If a person dies intestate, distribution of estate property will be made in line with the Administration Act 1903, WA Section 14. The Act typically provides that household chattels and a certain monetary sum, plus interest on that amount, will be distributed to a particular beneficiary, such as a surviving spouse. The balance of the net estate will then be distributed to family members and relatives in specified fractional shares. A table outlining who is entitled to what under the Administration Act 1903 WA can be found in Section 14. The Supreme Court appoints a person through the Letters of Administration to deal with a deceased person's property following death in the case of no valid will existing. If you remember from our definitions at the beginning of the session, this person is called the administrator. The administrator of an intestate estate distributes estate property in satisfaction of any person's share, so there is still a way that shares are distributed. When it comes to distributing the balance of an intestate estate, duty will be charged similarly to a residuary estate with a valid will. If all the property is transferred in line with the Administration Act, only nominal duty will apply. In contrast, where the distribution of property is not in line with the Administration Act, duty will be charged at duty at the applicable rate on the variance. This is very similar to the rules regarding distribution under a will. Nominal duty will apply to the portion that is distributed in line with the Administration Act. So, the Administration Act, Section 14, states, if someone dies without a will, leaving a husband or wife, the survivor shall be entitled to all chattels. If someone dies without a will, leaving a husband or wife and issue, by issue, the legislation means child or children, it will depend on the value of the property, not including the chattels. If it does not exceed the $472,000, the survivor, husband or wife, shall be entitled to all chattels and all intestate property. If the value of the property, not including the chattels, exceeds $472,000, in addition to his or her entitlement that we just mentioned, the survivor is entitled to 1/3 of the amount exceeding $472,000, and the issue is entitled to 2/3 of the excess. So let's now look at activity 6, which explains distribution under intestacy a bit more. So we have Errol Oldie, and he dies intestate. He is survived by a wife and 2 children, Judy and Florence. His assets include a house worth $650,000, household chattels, and shares worth $300,000. In the distribution, his wife receives the house and chattels. The shares are distributed to Judy and Florence to the value of $150,000 each. So, what are the duties implications in this scenario? In this situation, the wife is entitled to the $472,000 of the property, as outlined in Section 14, subsection 1, 2b, plus 1/3 of the residue, which equals $631,333. This is in line with the Administration Act and therefore chargeable at the nominal rate of duty of $20. The excess, $18,667 of the wife's property value entitlement that she receives through distribution, is chargeable at duty at the applicable rate, and the transfer of the shares to Judy and Florence are not dutiable transactions. Okay, that brings us to the end of the distribution under an intestacy. So let's move on to learning outcome 5, deeds of family arrangement. With deeds of family arrangement, the executor or administrator and beneficiaries of a deceased estate may agree to vary the distribution from one provided for in the will or under the Administration Act if there is no valid will. The parties will usually record the agreement in writing in a document called a deed of family arrangement. Let's look at activity 7 now. So this is an activity that demonstrates how we would determine duty because of deeds of family arrangement. A will provides for an estate to be divided equally between Betty and Brian Bottle. The affairs of the estate are complex, So Betty agrees to surrender her interest in the estate if Brian immediately pays her cash consideration. The parties execute a deed of family arrangement to evidence this agreement, and no duty is chargeable on this. The estate holds land valued at $2 million, and when administration of the estate is completed, this land is transferred to Brian only. Brian receives all of the property, and Betty receives $900,000 from Brian. What are the duties implications in this scenario? So the will provides for an estate to be divided equally between Betty and Brian. However, in the distribution, because of the deed of family arrangement, Betty agrees to surrender her interest for $900,000 immediate cash consideration. The parties execute a deed of family arrangement to evidence this agreement, and no duty is chargeable on this. So remember, cash is not a dutiable property, so Betty does not have to pay any duty on that money, the $900,000 that she receives. The estate holds land valued at $2 million. When the estate is fully administered, the transfer of this land is to Brian only. What are the duty implications for Brian? The answer is nominal duty and duty at the applicable rate. Brian will pay nominal duty of $20 on the $1 million which he was entitled to in the will, plus Brian will be charged with duty at the applicable rate on $1 million, so Betty's half share on the land, and this is the value of the land that he received as a result of the variation to the will. We have now covered deeds of family arrangement. The next section will cover the information you need to provide when dealing with deceased estates. The following information is required for a transfer of agreement for the transfer of or a declaration of trust over dutiable property in the estate of a deceased person. So, evidence that is required includes the date of death of the deceased person and either a copy of the will and probate of the deceased person and any codicils, or, in the case of an intestacy, a list of the persons entitled in distribution under the Administration Act 1903, their relationship to the deceased person, and the share of the estate to which they are entitled. We will also need to know the amount of any consideration being given under the transaction, the amount of any liabilities assumed under the transaction, the amount of any debt released or extinguished under the transaction, and any other relevant information that may assist in the assessment of duty. So, what if the deceased estate is distributed differently from the terms of the will or Administration Act? Well, if the property is distributed differently from the will or Administration Act, you will need evidence. And these are statements of the estate's assets and liabilities at the date of death of the deceased person, date of the arrangement, and completed duties valuation forms for all land forming part of the estate, and any other relevant information that may assist in the assessment of duty. Please note that a completed duties valuation form is not required if lodging electronically. Clients now have the ability to pre-fill valuation data in the online services portal or duties lodgements. So we've now covered information requirements for deceased estates, and I'll hand you over to Alandra, who will take you through the next part of the webinar.
Okay, thanks Zoe. We are now going to look at Learning Outcome 7, which is life and remainder interests. In the following slides, we'll be covering wills or arrangements which contain the creation of a life tenancy and any of the estate assets. Okay, we're only going to outline life and remainder interests in today's session. So a life interest in a property gives a person a right to live in the property as well as the ability to sell, rent, or use the property for their benefit. A life interest differs from a right to reside as the interest in the property is not forfeited if the person vacates the property. A remainder interest happens when the owner of an asset transfers the legal title of the asset to another person and retains or grants to a third person an interest in the asset for life or a specified period. The interest held by the person is called a remainder interest. Life and remainder interest can be a transfer of dutiable property, as referred to in the Duties Act Section 11A, or a surrender of special property in Section 11G. Depending on the circumstances surrounding them, special dutiable property is defined in Section 18 of the Duties Act to include a life interest in land and a remainder interest in land. Where a life interest or a remainder interest in land is transferred, a valuation of the interest will be required. And Revenue WA assesses the value of life and remainder interest by applying the Australian Life Tables to the land value. The table is published by the Australian Government Actuary. Certain circumstances, such as where the holder of a life interest is in poor health, may be taken into consideration. Again, as completed duties evaluation form is not required if lodging electronically. As Zoe mentioned earlier, clients can now pre-fill valuation data in the online services portal or in the duties lodgements. You need to give the information on the slide for transactions in life and remainder interest in dutiable property. So, date of birth, general health, occupation, and normal place of residence of the life tenant. The details of the income generated from the property. So this could be copies of leases or agreements affecting the income produced from the property. We have the details of any expenses relating to the property that the life tenant is responsible for. And a duties valuations form completed for the property, that is land, for which the life remainder interest was granted or surrendered, along with any other relevant information that may assist in the assessment of duty. Okay, that does include our brief outline of life and remainder interests. Moving on, we're going to look at Learning Outcome 8, which is our final topic of valuations and foreign transfer duty. So when is a valuation required? A valuation is required when the transaction results from an arrangement, varying the distribution of the terms of the will or provisions of the Administration Act, or the transaction is the surrender of a life or remainder interest. Duties valuation forms are not required if a valuation is obtained from a valuer licensed under the Land Valuers Licensing Act 1978. And these valuations will only be accepted if it was made within 3 months of the date of the transaction, the total value of the land is not greater than $2 million, the valuer has carried out a physical inspection of the property, and the Commissioner receives written advice from the taxpayer confirming that no improvements have been made to the land since the valuation was conducted. If an approved license valuation cannot be provided, then Revenue WA will request a valuation from the Valuer General. And once again, you can lodge electronically, and if so, you don't need a completed valuations form and can pre-fill this online through the online services portal or the duties lodgements. So if a non-complex will is presented at the front counter and that has proof of probate attached to it and the transfer of dutiable property is following the terms of the will, this is considered a routine transaction. And routine transactions are those that do not involve time-consuming complex assessments or decisions that do not require exercise of discretion or judgment by the revenue officer and only involve parties who are acting at arm's length. In the case of intestacy, a complex will, or a scenario where the distribution of property does not reflect the terms of the will, or a transaction where a valuation is required. This is considered non-routine, and this will need to be lodged with Revenue WA for assessment. So just note that deceased estate transactions can be lodged via Revenue Online, but unable to be self-assessed via online duties. If a valuation is required, a completee's duties valuation form should be provided with the duties document lodgment and assessment form to enable the valuation to be requested as soon as practicable after lodgment at the front counter. And transaction records for non-routine transactions and routine transactions that do not require immediate assessment must be accompanied by a duties document lodgment and assessment form together with any supporting documentation when you do come to the front counter. So from the 1st of January 2019, a new form called the Foreign Transfer Duty Declaration form will need to be completed by each person, whether they are foreign or not, who is acquiring interest in any type of land and whether this is residential or not. If there is more than one person acquiring one piece of land, then multiple forms need to be completed and lodged. This also needs to be done within 2 months after the day on which liability arises for the land. And this is usually the execution date of the contract or when the land is transferred. So pretty much when you lodge the contract, you should also lodge the declaration form too. And foreign transfer duty is charged on 7% of the dutiable value of the residential property acquired by the foreign person. And this again is determined by the greater of the consideration paid or the unencumbered value of the property. Most dutiable transactions that are eligible for a nominal rate of duty or an exemption from duty will be exempt from foreign transfer duty, except for 2 scenarios. So we'll go through them now. First scenario, for transfer between spouses, where the transferee is a foreign person and foreign transfer duty was not paid when the transferor acquired the property. Secondly, a vesting of trust property and the transactions involving apparent purchases, where foreign transfer duty was not paid by the trustee or apparent purchaser on a previous transaction for the residential property. Where duty is not charged on a dutiable transaction as a result of the no double duty provisions, the transaction will not be charged with foreign transfer duty. An exception exists where a non-foreign purchaser on an agreement to transfer residential property substitutes their interest to a person or is acting as an agent for a person who is a foreign person. So for example, if residential property is transferred to a beneficiary who is a foreign person, then no foreign transfer duty is payable on the transfer. We will assume here that there was no consideration paid. However, if nominal duty partially applies to a transaction and duty at the applicable rate applies to the other part, then foreign transfer duty will apply on the dutiable value if it is transferred to a foreign person. Here we assume these transactions were on or after 1 January 2019, and if acquired before the 1st of July 2019 or 1st of January 2019, foreign transfer duty is not applicable. Okay, let's look at an example under the terms of a will where we have Samira and Senadi, and they're entitled to a half share in a residential property each after the 1st of January 2019. Rather than taking equal shares, Samira and Senadi sign a deed of family arrangement through which Samira will get the whole property in exchange for paying Senadi 50% of the market value. Once Samira made the payment to Senadi, the property was transferred to Samira. Okay, the question, what duty is payable in this case? Nominal duty is payable for the terms of the will transfer, which is the 50% of the property. The other 50% that Samira purchases off Senadi is not exempt from transfer duty or foreign transfer duty. The dutiable of that 50% will be used to be charged transfer duty and foreign transfer duty. So well done, everyone. Okay, so we have now finished covering all topics listed on the screen. So we're going to show you some resources now of some of the information we spoke about today in the session, which is on the wa.gov.au website. So I'll hand you over to Zoe, who will go through the rest of the resources for you now. Thanks, guys.
Okay, hi everyone. I'm just going to go through some resources now. So the first lot of resources I'll show you is in relation to transfer duty. So if we just type transfer duty on the search bar on wa.gov and just click that one there, this will take you to the transfer duty landing page. And as you can see, there's a lot of information here. Each of these boxes will take you through to a more pages with more information. And we even have a video you can watch down here, transfer duty in West Australia and introduction. So I'll show you this one, what is dutiable. And here you can see information on rates of duty, exemptions, nominal duty, and then we have at the bottom here the transfer duty fact sheet, which is a really good resource that covers pretty much everything we discussed today. So you've got dutiable transactions, dutiable property, new dutiable property, special dutiable property, dutiable value, exemptions, and so forth. So that's a really good resource. Another place I'll show you, I'm just going to go back. So if we want to find a publication, we can click that one there, and this will take us to the duties, forms and publications page. And here we've got the fact sheets. So I just showed you one of them. I showed you the transfer duty overview fact sheet. We also have foreign transfer duty, and what else? Transfer of residential land, and many others. As you can see, there's quite a lot there. Okay, under forms, if you scroll down under transfer duty, you'll be able to see transfer duty statement, no hard copy instrument that you remember we touched on today. And we've got transfer duty statement, family farm transaction, and also, where is it? Oh, I think that's all we covered today. Yeah. And then under commissioners' practices, here you'll find the nominal duty for certain transactions relating to deceased estates. If you click on that, it'll take you through, and then you can open up the commissioner's practice from there. Okay, I'm going to go back to the search bar, and I'm going to show you the deceased estates page. So deceased estates duty requirements. It's got all this information, and then under related resources, you can see some more forms and publications relating to this. And then I'll just make a note that to find our web inquiry form, it's on all of our content pages like this, on the right hand side under contact. And here you'll see this one says make a duties inquiry, but it might also say just web inquiry, but they're the same thing. And then you go in here and you pick your inquiry type, and then whether your issue is urgent or general, and then you just follow through to submit your inquiry. The other thing I want to show you is our customer education page. So if you type in customer education, and then this one will pop up, Revenue WA, customer education. This is where you can find all of our webinars. So under each of these tabs, so under payroll tax, you'll see our next upcoming webinar for payroll tax overview, taxable and exempt wages, and contractors. And the same goes for the other topics there. The other thing on this landing page is the e-newsletter. So this is a great resource for legislation amendments, Revenue WA news, and future customer education sessions are also advertised here. So you can subscribe via this link here if you want to receive our e-newsletter. The other thing I'll show you is our YouTube channel, and you can actually access this via this page by clicking videos. And it will take you to the Department of Treasury and Finance YouTube. And then if you want to see transfer duty videos, it's best to go to playlists and then look for the topic you're interested in. So here we have transfer duty down there. And if you click view full playlist, this will take you to all of our videos relating to transfer duty. Okay, the other resource I wanted to show you is this page on Landgate. So we touched on where to find information about lodging a survivorship application with Landgate in the session today. So this page on Landgate's website is where you would go. This is where any person registered with another as a joint tenant dies. The surviving joint tenant or tenants must apply to be registered as the surviving proprietor or proprietors on the register. So this is the page you would go to. Okay, so that is all the resources. So we've covered all the aspects of transfer duty and deceased estates in this webinar now. Well, thank you all for joining and enjoy the rest of your week, and we'll see you next time. Thank you.